The chicken and the egg is Canada's got to be open for business. If Canada keeps going down this path, it's much harder to unwind because you'll have a generation of people that think that this is normal.
This is Jay Martin.
Brian, it's about time I got you in the studio. I'm looking forward to this chat, so thanks for coming in today.
Thanks for having me, Jay. Me too.
So I want to pick your brain on a variety of different directions today. And I want to start just with like geopolitical threads that you are paying the most attention to, because we're hit daily today by headlines, most of which I would categorize as sensational and hyperbolic, but some have substance. And it's our job to find those, right? And go a bit deeper on what matters. So, you know, given your business, you have eyes on a lot of different industries, a lot of different geography. So what are you paying attention to from a geopolitical standpoint right now?
Well, thank you for having me. It's great to be here. And I love what you do, love the work you do, the content you provide. So I appreciate being here with you.
Thank you.
You know, I think we need to take a step back to see and notice what were the opportunities in the, let's say, the resource development space historically. And through a time that maybe we grew up when we were young and growing up, a lot of the opportunity was around the world through this globalization trend and the opening up of a lot of jurisdictions that I think in retrospect were kind of given these opportunities to develop resources where the West felt like, this is kind of, I want all these things, but I don't want to see it.
There's a certain part of the supply chain we don't want in our backyard.
Yeah, we don't want that stuff.
Yeah.
You know, those mining guys, those even in many ways, those oil and gas guys, you guys go do your thing, and mining worse. Oil and gas, a little bit more accepted in let's say predominantly the US.
Yeah.
And, you know, who led that wave of capital deployment and securing of resources? A lot of it was led by China. You know, a lot of their work in Africa, a lot of their work in Latin America, deploying capital, working very close government with corporate, kind of public-private partnerships, and executing on a long-term plan to secure mineral resources for their big population. And I think what you're starting to see, and it's really just begun, is the West, led by the United States, and a president who's not afraid to action. You're seeing the mobilization of people and capital to wrap their arms around resources, both domestically and internationally, with a final home of product in the United States. And for me, it's, you know, I've been in this business now for almost 20 years. Can't believe I'm saying that. I don't think I ever thought I'd see the day where you'd have such a focus from the United States on national security. And when you bring up national security to an American, which you know, that's a big one. And that's what's now working its way through the system, through government investing in, if you think about it, like chips and natural resources. So what does that tell you? That action is telling you something that I think is a broader based strategy that in many ways America's catching up to what really the Chinese have done for the last 2 or 3 decades.
So let's use the recent rare earth headlines maybe as a bit of a demonstration, because this captivated the world a month ago, 3 weeks ago, right? And, you know, when I saw this, it was an extension of restrictions on rare earth exports. I kind of felt like this has been baked in the cake for 20 years. It's not really news. Now, new restrictions on these materials is significant, but this is a contract that we all signed, to what you said, 20 years ago, right? We decided that we wanted the advanced technology, we wanted the chips, the EVs, and we wanted to design those products at home so we could control the interface and the applications and the usability. But there was one very specific part of the supply chain that we didn't want, and that was the dirty part, right? The toxic process of extracting and refining these minerals. And if a country like China would raise their hand and would say, well, we'll do that. We'll cede the environmental concessions and we'll leverage our cheap labor so you guys can have cheap iPhones. That's where we landed today, right? And, all that to say, like, we've existed in the era where if you had the cash or the credit, you could buy whatever you wanted from whoever had it. That was globalization. My entire life has been that era. Yeah. I don't think we know what occurs next, but I do feel very convicted that that era is over. Do you agree with that? And that therefore, for us to get our hands on the things we need is just going to take a bit more urgency because those things are far less certain than they used to be. And that's why we're seeing the establishment intervene in a way that's sort of unprecedented in the West. The public-private partnership is well proven in China, but many other countries. But we've had a laissez-faire approach in the West, right, which has been nice. Do you think that era is coming to an end? And how do you, as like a free market entrepreneur, kind of reconcile the government's intervention in our industry can be beneficial, can also be a slippery slope, right? How do you process that, Brian?
I think the way that the world is rethinking isn't a bad thing. It does cause, it's uncomfortable. It's uncomfortable when anyone or any organization or any major population, maybe the two biggest powers in the world, are going through a moment of, hey, wait a second, is this relationship still mutually beneficial the way it was historically? That's what's being challenged. And in many ways, that's breaking down trust. There was long, again, established ties. And I think what that ends up leading to is, in many ways, opportunity for countries that find themselves in a place of long resources to really capitalize on that. And that's where where I spend a lot of my time. And you mentioned free market. I'm such a believer in free markets. The more I've spent time around the world, seeing different places, experiencing life in different places, markets should exist and should be free. However, when a country such as the United States, which is so dependent, has built its entire system around reliance on a supply chain that is now being challenged, you can see why mobilization is happening from the highest parts of the government. And I don't think it's just going to be on semiconductors. My position would be, not unlike they turn their attention to getting off depending on OPEC for oil.
Yes. Okay.
I see a lot of parallels to today where their dependence on OPEC, they were able to supply more oil from the United States through the incredible technology of fracking, through the capital that was spent by the Exxons, by the Chevrons, by a lot of independent companies in the Permian Basin. All of a sudden you had a country that was well in the deficit to now pretty well self-reliant on oil. The difference this time on minerals is that they're going to probably develop a number of mineral projects in the United States, but what they will start to realize, and I think they've already realized, is actually they're going to have to go outside their borders too. So it'll be interesting to see which countries they align themselves with to secure supply from those countries. How much of the Ukraine situation is critical mineral? How much of what President Trump is talking about in the Congo is critical mineral? It'll be interesting to see how those conversations play out. Canada specifically has a remarkable opportunity to fast track permitting. The projects are there. I think many of us know it. We're on the doorstep of the United States. It sure would be nice as a Canadian, I haven't lived here for many years, but it sure would be nice to see our country mobilize and maybe even create a sovereign wealth fund and do things that countries in the Middle East who find themselves very long capital, not just the Middle East, Norway, find themselves in a net long position of resources. They focus on developing them. They benefit the government, which therefore will benefit the citizens of the country. It'd be amazing to see, and quite a logical step for the country of Canada to be front and center and let go of the egos, let go of the negotiations that play out. Just like be practical, about what a big country needs, when I say big country, a big consumer-based country, big population, lots of wealth, great capital markets, and how relationships like these can be formed. And I think that is the reset or the transition that's happening. As opposed to an end, I think it's more of a transition. And it's for those countries that capitalize on the opportunity that will benefit, and their citizens will benefit from it. But it's a tried, true, and tested model in oil. Why can't it be in critical minerals?
I love that you brought that up, because that never enters the conversation when we talk about sort of reshoring key industries in the West, and can the United States bring manufacturing back? Can they control the resources they need? I mean, the logical response to that is, well, you're up against a competitor who's been doing that for 30 years and has the political will to push policy forward without worrying about 2-year election cycles. And is that a reality in today's America, right? To actually commit to a long-term plan that has not been popular for 20 years, and somehow it's going to be now. But with the right incentive structures and, I guess, corporate coordination and cooperation, it's actually happened in the past and recently, right? Which is a really important example that actually doesn't get brought up very frequently. I haven't been bullish on Canada in a long time, and we have been divesting from Canada, spending more time elsewhere and shortlisting cities in the US. However, I firmly believe it's a country that has all the right ingredients, right? And as you mentioned, it's like 25% of the world's potash, 30% of the softwood lumber, oil, gas reserves, the richest uranium deposits in the world, lithium, et cetera, et cetera, et cetera, and a shared land border on the other side of which is the world's hungriest and wealthiest customer, right? So I am optimistic that we may be influenced by the political shifts in the United States to maybe follow that lead. And I think it's, to a degree, happening. I've been pleasantly surprised in the last 6 months by some of the shifts in permitting and regulation in the natural resource sector. Do you see that too? Like, what's your take? Because you grew up in Canada, you haven't lived here for years. You're a globetrotter, but you'll put down roots somewhere, right? What's your take on near-term outlook for the Canadian economy?
I think that Canada has the opportunity of a generation. Okay. And I don't say that lightly. It has the opportunity of a generation to capitalize on what this country is great at, which is to take a quick step back. I've realized in living in different places, the fabric of countries it's a very real thing, and you don't want to make people or countries kind of what they're not. Mm-hmm. So, for example, for the United States to become a mining, giant, not as natural as very strong in consumer marketing, pharmaceuticals, financial services, technology. Like they're leaders in all of those places. So let's not try to be something that we're not. No person, no organization, no country should be something what they're not. So if we recognize that that's where probably the greatest empire that's lived since maybe the Roman Empire, how do we play into that broader strategy? So what do? We go to what we're great at. Canadians are thoughtful, hardworking. For the most part, you've got a very educated population. And the reason I hesitate a little bit is there's been a lot of immigration, a lot of loose immigration recently, but for the most part, but I think we need to stop catering to the minorities, and that may not be a popular thing to say, but, I've seen in spending time in some challenged countries, I see what happens when that happens, and it's not good. you remove progress. And so if Canada can take a stance and say, we're going to focus on prosperity for everyone, as opposed to catering to minorities, we have a different outcome. Like, we firmly have a different outcome in this country. And I don't even think it's like that uncomfortable of a step. I think it's just an intentional decision. And let's just play out a world where 50 or 100 projects get approved. Not to be reckless about it, but like, hey, let's prioritize this. Let's fast track this. Think about all the prosperity that gets brought into the country, locally, within the town, within the province. And in aggregate, you'll start to see general Canadian prosperity. And instead of thinking about, I even think about, like, it's wild to me that, as a foreigner, you can't buy real estate in Canada. Like, why would you do that? I spent a bunch of time in Dubai recently. So what do? They allow everyone to come in. And again, everything's got positives and negatives, but everyone come in, but they focus all of their attention on enriching the life of their citizens, as opposed to diluting out the value for kind of everyone that comes in. Mm-hmm. And like, maybe we can learn a little bit from that too. Maybe being a Canadian is really valuable. Mm. Maybe that seat at the table is really, something to really respect and honor. And I think the more Canadians, Americans are amazing, the most patriotic people in the world. I love it about it. It's like an infectious feeling. Why can't Canada feel that way? Mm-hmm. Why can't we have that? Because in many ways, and I lived in the UK, spent some time in Europe, some time in Africa. Canadians are actually really ambitious, but in a pretty humble, in a Canadian way.
Okay.
So let's harness that ambition, and maybe be a little more American in our sense of pride of country. I've even, as a Canadian, struggled with the last 10 years here. Like, I've really struggled with it. Part of the reason why I left. Mm-hmm. Because it didn't feel like we were championing progress, success, prosperity. It's not a small, people, and I bring this to a lot of my businesses, don't think about a pie that's finite and try to get your piece of the pie. What about a bigger pie? Simple as that, like that mentality. So policies like not allowing foreigners to buy Canadian real estate because it's expensive. Okay, well, instead of trying to cut a bunch of capital flow out and make people feel that have invested in this country wronged from overseas, why don't we try to create more prosperity? Why don't these wealthy developers that are being pretty stress tested right now build more supply? Build your expensive condos for foreigners, but like create more jobs, build more affordable housing. Like, don't constrain demand, increase supply. Like, there's just simple things.
Yeah.
In developing our resources, maybe there's a strategy from the government that says, hey, we want to be stakeholders in all these. So we're going to fast track everything, but in return for that, we're going to own maybe some royalties on it. Yeah. That's going to create a sovereign wealth fund.
Right.
Why not? That happens in the Middle East all the time.
Yeah.
Some of the wealthiest countries in the world. So again, all these things are easier said than done. But I think it is a generational opportunity and a step change in thinking that could give a country like Canada pole position.
And as you're walking through this, I found myself wondering, what would the catalyst need to be, right, to create that shift in psychology and culture in Canada to think about our economy differently? Because, I'd love to know your thoughts. My take is that Canada is a very simple country in that we do natural resources extraordinarily well. Mm-hmm. And if allowed to do that extraordinarily well, so many other industries can benefit from the ripple cash flow that comes off of that. But if you villainize the pillar industry, nothing else really works because there's not enough cash flowing around, right? And that's kind of where we've landed today. And it's important to remember that it wasn't that long ago, 2008, Canada came through the GFC with a healthier balance sheet than any other G7 nation because we rewarded our extraction sectors. It was responsibly governed and operated. But 10 years later of villainizing that, the opposites occurred. And now we're, I think, the highest debt to GDP in the G7, and
just think about that environment though. Yeah, and again, we were both young and maybe not as well, I'll speak for myself. I started I dropped out actually in 2008. So my first days on the job was September 2008. And I'd say this maybe not being as educated in financial markets as I am today, but what was happening in Canada at the time? You had so much foreign capital coming into the country, not just real estate wise. A great relationship with China, an exceptional relationship, one in which people spent time here and moved families here. These are big life decisions. They were doing that. A lot of the oil patch was funded by, and the expansion of the oil sands specifically, a lot of that was Chinese funded. You had, Mark Carney was in power then, and you had good support from institutional investors in Canadian, resources. So I think what we have right now in Canada is too many circles of influence trying to do too much, like different strategies. There needs to be a bit more, I think, of togetherness, like Australia is a great example of it, where there's more public-private conversation going on. There's mobilization of capital around these industries that result in prosperity for the country, but that capital will only mobilize if they see an environment that allows for value to be created. So the chicken and the egg is Canada's got to be open for business. It feels like the sign's like almost turning, but it's been closed. Like the sign has been closed. That's like my observation and the UK is going through it right now. Even the UK has changed dramatically since I moved there. And it's becoming it's pretty dire straits over there right now from what was a center of global financial influence, a refuge for so many parts of the world. It's called the East, and Africa. It was such a refuge. And you see a lot of policies changing, trust breaks down, and people say, hey, wait a second. We live in a mobile world. So we can, mobility, you can move. Yeah. Same things happen in Canada for probably 10 years. And if we can go back to the Canada that was thoughtful, didn't let, it's almost like an oppressive state, it feels like. It's like, let's be proud of what we have, grateful for the endowment that we have of mineral riches, and be fair to everyone, reward investors for taking risk. Build support in institutional and pension funds, but they're only going to be there. I don't kind of blame them. It's sad that they don't mobilize capital around resources, but they don't feel safe either. So what's that telling you?
Yeah, yeah.
They're putting their capital into the U.S.
Yeah, the Canadian pension fund.
Yeah. So people can whine about it, or it's like, let's actually be truthful with ourselves and see why is that transpired. And again, I don't think it's too many tweaks, but if Canada keeps going down this path, it's much harder to unwind because you'll have a generation of people that think that this is normal.
Sure.
Do you see what I'm saying? Because the young people come out and be like, okay, well, maybe this is just what it is.
Right. Yeah.
Or it's like, hey, that was a tough decade. Yeah. That was a tough decade. And maybe all of us can be better, each and every one of us, but it's got to come from a place where prosperity is the focus. And I've experienced it in ways in the Middle East and what can happen from that. I'm not saying nowhere's perfect. That's not perfect in some ways either. But Canada has an incredible opportunity.
Yeah, but you can still take lessons from a place that isn't perfect, right? You can read a book and discount 70% of it and take lessons from the 30%, and the sovereign wealth fund concept is really interesting. And I don't know the best mechanics of that. But if the outcome is that the population gets to participate in the upside,
Yes.
then there's the incentive, right?
The
Because you're
alignment's
gonna,
there.
yes,
Totally.
you'll change if you're scared of something or if the new opportunity is better, right?
That's
and
it.
if that new opportunity could represent that, that's an interesting avenue.
But the challenge Canada has, I think, is there's like three buckets. It's the settlers of the country, the Indigenous, which is a hot topic. There's Canadian citizens, and then there's this immigration policy that I think has been probably, as I look at other countries I've lived in, pretty loose.
Yeah.
Pretty loose. And it's now you see cities like Toronto, most acutely feeling the ramifications of that in their day-to-day life. Break-ins, armed robberies, like what?
Mhm.
Like that's not the Canada we grew up in.
Totally. Yeah.
No way. And why are we okay with that?
Mm-hmm.
Why?
So are you raising your hand for for the big seat?
Oh, no, definitely not. No, I think what I'm saying is as a Canadian born and now seeing the world from living in different places, which has become a lot more valuable than I actually would have thought.
Yeah.
It's recognizing some of the shortcomings. And even in our own business, a lot of our attention's in the US, and that shouldn't be the answer.
Right.
But as a free market entrepreneur who's built businesses around the world with different nationality, different people, all walks of life, rich, not rich, like you start to see, I've started to just be like, sometimes it is what it is, okay, in terms of people. So how do you get the best out of situations that allow for prosperity for so many?
Mm-hmm.
And that's where I hone in on Canada to say, if we could just leverage actually what we already have, so much of what we already have, we'd be in a very different place. And I think we could be a mix between Norway, Australia, maybe take a little bit of the book of the Middle East. What a country, on the doorstep of the biggest consumer and maybe the greatest economic empire, since the Roman times.
100%.
What an opportunity, and be a great partner to our neighbor.
Yeah.
And instead of having
an indispensable partner, right?
Indispensable, we slot in. It'd be amazing. Yeah. And I think there would be great harmony. I think there would be trust built. But going in with President Trump, there's no point in trying to outduke him or it's like he's an amazing driver and he's creating a wake, and it's a matter of understanding what the big buyer needs and getting in there and providing the solutions.
I want to pivot to your work at the SAF Group.
Sure.
And so if you could introduce that for me, Brian, what's the mission and the mandate and the core business at SAF Group?
Yeah, we could have talked for hours about that. Clearly, it's a passionate thing for me. So SAF Group it's Western Canada's largest alternative asset manager. We have two sides of our really three: an insurance business, reinsurance business, institutional asset management business focused around private credit, and then what we call our growth and merchant banking business, which is essentially principal capital, our capital going in and buying 20 to 50% stakes in businesses that we see a lot of value in, that we think we can help provide strategic guidance to, that we believe we can help from a corporate development perspective, whether it's bringing in other strategics, hiring talent. And, we have an exceptional group of people. We're about 50 to 60 people strong within the core business. But across the portfolio, it's, that many thousands of people that rely on the capital that we provide.
Yeah.
And I've kind of never been more energized in my career in what we're doing. The influence and the results of kind of this hard work that we've put together, the projects that we're working on, how big they are. There's no lack of ambition. We're lucky to be surrounded by a group of young, ambitious guys and young ladies that are on the mission to create great businesses, to be good stewards of capital, to be good stewards and fiduciaries of assets across resources, health tech, energy storage, farmland.
Right.
We're curious, we're ambitious.
Mm-hmm.
We try to be great partners. That's an important one for us. And we try to find great entrepreneurs that are willing to put in what it takes to create, great organizations.
And where are you seeing right now on the growth capital side of the business, that third arm, I suppose? Where's the disproportionate value and opportunity? Are there any sectors that you're primarily focused on right now? I mean, you mentioned 4 there, and it could be those 4, but where do you see the most opportunity and value right now?
A few spots. I'd say, I think in general, we're going through a time that hard assets are going to start to get a lot of love again.
Yeah.
So think of not that again, I was a market participant at the time, but it feels like kind of post tech where you
Early
still
2000s.
Yeah. I think the difference is you now have some great tech businesses that have been built that, will withstand, I don't think it's crash then emergence of hard assets. I think they're going to live together. There may be a relative re-rate in value, but I think hard assets will get the type of attention that at least I heard the stories of back kind of early 2000s. It feels like, what emerged then? What were the big, kind of macro events? You had a rollover in kind of a hot tech market. You had the emergence of China and let's say emerging markets needing a lot of resources.
Yep.
And you had a globalized, world was in full globalization mode. So capital was moving easily through the system. And the difference now, it feels like, is there's going to be, I don't think there's a broad-based win. I think there's big winners and not losers, but winners and, those that capture the opportunity,
Sure.
country-wise and company-wise. And that's maybe to my earlier points is I think the US will go out and get these assets. So one should position themselves, I think, around that, because what we've also noticed since COVID, which wasn't the case as much early 2000s, is the American dollar, the American capital markets, the American debt markets, it reigns supreme. Their market share of global wealth has only increased specifically on the back of COVID. But I think the latest numbers, it's over 40% of capital markets in the United States. They used to be around 20%. So you just need, it's the biggest, it's like a hose, right? They've got the fire hose. The rest of us are dealing with maybe a bit more of a garden hose, and smaller from there. So from an economic opportunity perspective, I think that aligning yourselves with fiscal policy essentially is important. And then I still think you've got a number of assets, maybe specifically in the Canadian markets, that we feel you can still be a buyer into a number of these assets that in a way have been orphaned.
Okay.
And require a lot of capital to develop. So I think there's good value there. But all in all, we've been through a number of years of better, at least nominal, equity markets. And so that trend probably continues. On real terms, the argument is different. Mm-hmm. But if you have disposable income in the world, you've been buying the S&P, it's been a pretty good place to put your money.
Sure.
That works until it rolls over. But we like to try to find assets, businesses that we can come into in a significant way. We're valued as partners. We're good partners to the entrepreneur and to the management team and to the board. We take a long-term view. Some projects that we're in today, like deep sea mining, it's now 10 years since I made my first investment.
Okay.
So I find as ambition goes up, patience needs to also increase, and duration, because you're moving a lot of things.
Sure.
You're moving, yeah. Organizations building, you need more capital. You're building things around the world. But we take a long-term view, and I find that if you look historically at some of the greatest value creators in any industry, great things take time.
Yeah.
They just
Of
take
course.
time.
So this kind of comes full circle to a degree, the hard assets argument, raw materials, for no other reason than just that industry has been starved of capital for 12 years. There's definitely opportunity now, and the world's waking up to it. And then that at the intersection of an American administration that's hyper-focused on securing those materials, if you can find those opportunities that land in both camps, right? This is a under-capitalized commodity that is in high demand by the regional hegemon, might be likely to receive some political support or policy support. Is that the sweet spot right now? And we've seen obviously a handful of companies fall into this bucket, whether it's MP Materials, Lithium Americas, US Antimony, Trilogy Metals just a few weeks ago, right? And good example because, there was an equity stake taken, but also policy adjusted right after. The Ambler Road was the barrier to that project, the access to Alaska. And now with this new activist shareholder being the US government and Trilogy Metals, policy adjusted right afterwards, right? So it's this, not just deep pockets, but the ability to modulate policy if necessary. So inside of that, and I want to talk about, deep sea, because I had Gerard Barron keynote at a technology conference I ran, and I'm assuming that you made the introduction.
Yeah, I remember that.
Because this would have been about 10 years ago.
Yeah.
Right? And he introduced...
Here in Vancouver.
Yes, that's right. The Extraordinary Future Conference.
Yeah, that's right.
Yeah, man.
Of course.
And he introduced the topic of deep sea mining. And at this point, I had never really looked at it. And I don't think many in the room had. It was very novel at that moment. So I want to talk about that, maybe catch us up on where that's at, because, Gerard's been doing, amazing media appearances. I caught him on the Sean Ryan podcast just last month and kind of explained the story. And, they seem to be benefiting from these policy shifts. And as is your new company, right? The Metals Royalty Company. So I want to talk about that too. So maybe walk us through that bigger picture, the origin of deep sea mining, where that's at today, and how one of your new ventures fits into that.
Well, it's winding back to when I was CEO of Lithium X, and I got introduced to Gerard in London. And after spending a little bit of time over in Asia, and at the time, it's 2016, as a first-time CEO and a good dosage of naivety, we got into lithium, and we're like, oh, this is going to be amazing, and it's going to be huge. And then we realize that lithium is an important component of this transition that's taking place, specifically around transportation and electric vehicles. But there's much bigger industry around. These are basics nowadays, but back then it was like around nickel and the need for nickel, around copper and the usage of that. But if we look back, lithium was such a small market, and some of the value creation that happened in it was because of the merits of it being a small market. So like a little bit of extra demand,
right,
can move price quickly, where these deeper markets of nickel, this deeper market of copper, it takes more time to work through supply and demand shifts. But what I recognized when I was in Asia was the conversation, we would have with off-takers or, end users, Korea and China. They're like, this is great. This is part of our solution, but like, what about these bigger metals? Because they're looking decades out, right? And it was around the time I got introduced to Gerard. And so my view at the time, similar to I use this example of similar to the oil sands, take the environmental impact aside, which is very real. The oil sands was known for decades, but there was never a time in the oil price that the oil price was high enough for long enough to make the investment decision, feasible. I.e., what created the oil sands? Oil over essentially $100 for a period of time. And so I looked at the deep sea resource and I felt at some point, this is going to be extraordinarily valuable. At some point. Why? Because it's very rich in terms of grade. You know, it's like, well, on current mines that are coming online and like copper equivalent, it's like 10 times the grade.
Mm-hmm.
So that's important. And then you have billions of tons. And it took, I think, a number of factors. Like, it's been a wild ride from the highest of highs, you know, to really like the company being on, you know, on insolvency's door. But Gerard's been one of the greatest entrepreneurs I've ever had the privilege of working with. You know, he did not let this go.
Mm-hmm.
There was an incredible partner that came in from San Francisco that backed the company through a very difficult time. A Dutch shipping company came in, run by an incredible entrepreneur, many billions of dollars of value created in his business. Now at the onset of the Hess family out of the United States, who just sold their 90-year or so business for over $60 billion to Chevron. On the back of that, Korea Zinc coming in, one of the world's greatest metallurgists. And so now you're starting to see the building blocks of a new industry. Whereas before, I think maybe all of us, me included, being a believer in this, probably didn't recognize actually the undertaking we may have been getting ourselves into, because it's not actually building a company. This is building a scalable resource business offshore for the very first time.
Yeah.
The oil and gas industry went through it, and look at the oil and gas industry's offshore assets today. Arguably the biggest and best in the world. So I think mining is heading this way. I didn't realize, I didn't know it was going to take a U.S. government to get behind it, or hopefully get behind it, or at least have policy that was open to supporting it. But now I see it's still, there's still lots of challenges, but like the resources there, the capital is now forming, the technical expertise that's required on maritime work is there from the Dutch group in Allseas. The metallurgy is there from the Korean group in Korea Zinc. So you've kind of got this group of Avengers, from all over the world that are working together to create this industry. And the easy button, if there is one for the United States, is go and build this industry. Why? Because you essentially get the supply that you've missed the last 20, 30 years that has really been built out of strategic planning from specifically China. You get a lot of material very quickly. And I think that's why it's probably really attractive for the United States. Because if you think about how many assets you'd have to go and develop to equate to what this, these resources in the Pacific Ocean have in terms of quantity. Yeah. I mean, it's a heavy lift.
Right.
So if America is going to say, hey, I want to secure my mineral supply, and this is a matter of national security, that may be the best option for them.
And so to clarify, what the asset are these highly concentrated nodes, effectively little baseballs on the bottom of the ocean that are very rich in nickel and copper and critical metals. That's a frontier industry for resources. Like that's not happened in the hard asset sector before. Yes, oil. And again, like interesting parallel, because I think that's important to recognize that that's not where the oil game started, right? It's easy to forget that it wasn't the same as drilling in Texas. So how do rights work? How is that game played, not just from a company standpoint, but from a country standpoint?
That's probably been the most challenging part. Historically, it was under the guidance of the United Nations. The metals company, Deep Green was the name of the company when Gerard would have been presenting.
That's right.
They would have had exploration licenses with the International Seabed Authority. there was a construct, and still is a construct, that said, here's 15 years. If you go prove out these different parameters, environmental baseline work, economic baseline work, and you prove that this is a feasible project, then that exploration license migrates into an exploitation license, i.e. you can operate.
Okay.
And without getting into too many details, my observation would be that that construct may not serve TMC as well as a US construct would serve TMC.
Yeah.
And so that's what you would have seen earlier this year, TMC going down the US route to essentially apply for the exploitation rights for this area where they've spent, I think it's pretty close to $1 billion now. It's well over 500 million.
Mm-hmm.
And put in the hard yards, to at least put this asset base in a position to start to be produced from. And the asset itself it's over, across a couple of concessions, but it's over 1 billion tons. I think the latest net present value I saw was well into the $20 billion number. I don't even think that's fair because I think, Robert Friedland's a great advocate for the mining industry in terms of assets that go longer than 20 years. You can't bring forward. So what is NPV when you've got a discount rate that doesn't give any value to something in 20 years? Mm-hmm. So even the 20 odd billion probably I don't think it does it justice.
Okay.
This is an asset that has almost $500 billion of metal value. That's how significant it is. Mm-hmm. But it's, like anything, it's, and this one specifically, international waters, capital formation, it hasn't been an easy journey, but it's one in which that is well worthwhile because the world needs it. Unless the world says, hey, you know what? We don't want to progress anymore. If that's the decision of leaders of countries, then you don't go to these, to the ends of the earth in many ways to get resources. But if the world's going to continue to progress, if there's going to be prosperity in a population of billions of people, I don't think we have a choice. If you look at the trade-off in mining nickel laterites in Indonesia, and Gerard brings this up often, which he's right.
Very important trade-off to recognize where it's currently coming from.
Yeah. So either villainize myself, more Gerard, he's at the tip of the spear, others involved in deep sea mining. Sure, that may be an easy button. Mm. Or maybe educate oneself on what is the trade-off. So do we think that taking down the jungle in Indonesia is a good decision? And all the animals that live there and rely on it, the incredible forests and trees that absorb a lot of carbon dioxide. Is it really worse going into the abyssal zone of the Pacific Ocean?
Yeah.
Is it really worse? I don't know. I don't think so. Of course, there will be consequences of going into the Pacific Ocean. And the biggest alert that I've seen is some sediment drift. And what is the result of sediment drift? It's pretty well the biggest pushback I've seen that is valid. But even that, I think, it's a long putt for environmentalists.
Well, it's important to recognize that it's a relative game because what's relative to the current option, right? Unless we're going to agree to shut down innovation and progress.
Totally.
It's not very likely. So I think that's the bet I have the most confidence in is I'm long human ingenuity and progress. We're not going to stop, right? And we're going to continue to find better solutions. And I mean, we spend a lot of time in Indonesia, the South Sulawesi Islands. That's maybe the worst environmental disaster of my lifetime that nobody is talking about, right? It's off the radar of a lot of folks, right?
Yeah, they don't want to bring attention to it.
No. But that's 67% of the current nickel market today, right? The vast majority of our nickel.
Exactly.
67%, like OPEC had 55% of the oil market at its peak.
Exactly.
Most of our nickel's coming from there, right? And you can't fly over it. Well, you can, but if you can't, just Google it, right? Check it out and get some pictures of what's happening there. And that will just give you perspective that we need to think about this from a relative standpoint.
I think that's fair. I think that's a fair place to come from, as opposed to an emotional response. Oh no, you can't touch the ocean. Well, hang on a second.
Yeah.
You know, that's where I would seek fairness in the discussion.
Yeah. I mean, it's actually back to where we started this conversation, that we are adamant we want the technology and the usability, but there's a part of the supply chain we're comfortable turning a blind eye to. And that lands us in a pretty awkward position. And it's landed us in a really awkward position in Indonesia. And one that, by the way, I also don't think is sustainable, right? At present, the Indonesian nickel mining sector has priced out a lot of Canadian and Australian companies because the price of labor is cheap and they're ceding all kinds of environmental concessions. But I don't think that's going to last. I think the pressure will continue to increase. We weren't talking about it 2 years ago. That conversation's increasing, and it's a big deal. It's a very big deal, and it will begin to get more coverage in the years to come, especially as Indonesia continues to modernize, right? New president there, they're modernizing the country in a lot of promising ways and organizing things a little bit more sophisticated than has been for the previous 15 years. Anyway, so on the heels of this idea, Gerard Barron and the Metals Company is your new venture, the Metals Royalty Company. So walk me through exactly what the intention there, the first deal that you guys did with TMC, what that looks like, the mechanics of it, and what's the mission behind the Metals Royalty Company, Brian?
The idea was to form a business around, in really every right, a world-class resource, which I believe is TMC's Nori concession. And it was getting a 2% royalty, 2% gross overriding royalty on that concession, and building a broader platform that focused its attention of capital allocation on essentially this U.S. strategy that is securing minerals. So TMCR exists to help the United States secure their mineral independence. What does that look like? It looks like starting with deep sea mining, which is a big solution for them. And it's using that company as a platform to raise capital and deploy into assets that in some format, whether it's 100% of their production or a part of their production, ends up in the United States. Some way, because I just think that I've never seen a bigger opportunity than this. And I think being a financial partner or capital solution to assets that have been really starved of capital for more than a decade, try to help them develop quickly to satisfy the needs of the United States. That's the crossroads we want to be in. And like I maybe was mentioning earlier, I hope Canada's a big part of that. I hope that Canada can be a big part of that solution because it's just logical. And I think a lot of my career has kind of brought me to this position in many ways. And we hope to build a great business that earns great returns for shareholders, while at the same time partnering with companies that see the opportunity and have the staying power to and the ambition to develop these assets. It's not easy, and get product to the United States.
And so it's a royalty business model. You're effectively providing capital, and the market you're isolating is those future resource extractors that are providing that raw material to the U.S. or U.S. adjacent administrations. Is that the sort of qualifier?
I'd call it, I would just, I would say that a royalty or more of a capital solution. We will be we'll be willing to invest in equity in companies. We will maybe help with offtakes. It's a financial business, a financial solution business that may take the form of a basket of royalties, but also other solutions across the capital stack that takes a long-term approach. I think where we can be a great partner is it's a permanent capital vehicle. You know, we're not under a fund structure that has a 10-year horizon and needs to hit certain return thresholds and then money goes back to investors. We're taking a 20, 30, 40, 50-year view on this. I think with the partnership with the Hess family, it's a big part of our business. In many ways, they help the United States as part of the solution for becoming energy independent on the oil side. They were part of that business. Of course, over time, they ended up discovering, I think it's the biggest discovery in decades in Guyana, but a lot of their business was US based. They share these feelings of focusing on getting mineral independence back to the United States and it being a national security problem. So this is what we're using as the fabric of the business to go into the world and find those assets, those entrepreneurs that are like Gerard. Gerard's a special one. So we need more Gerards in the world, but going into the world and finding those other kind of tenacious CEOs that are willing to do the hard work and develop these projects.
It's interesting. It's like one step out of SAF's current business model, right? How would you differentiate? Because the way you explain them, they actually sound quite similar, but there's obviously a bit more of a specific focus to the royalty company, correct? And is it fair even to call it a royalty company? Because as you explained, it may take that form, but you're looking at other opportunities too.
It's the continuation of what we do. It's like this natural evolution, and specifically into the pivot of being around government policy.
All right. Okay.
Where, SAF at its core is delivering great risk-adjusted returns to investors.
Yeah.
Full stop. Where this really has a important angle to it that is US domestic security.
Okay.
And like I said, I hope a lot of the solution comes from Canada. I'm going to do my best from the seat that I have in trying to form those ties and be a part of providing capital and maybe a catalyst for more capital to come in, because we can sit back and complain all we want. It's actioning that will create, even in a small form, maybe some more capital formation around, a perfect world where we can help be a small part of the development of natural resources in Canada, getting them to the United States and balancing out helping balance out the geopolitical powers that are. China is way further ahead than the West is on mineral security.
Yeah.
How do we help be in the mix on that?
Sure.
And there'll be many winners. It's not, we've got big ambitions, but there'll be many winners in this.
Hopefully.
Yeah. Hopefully. Yeah.
Yeah.
Hopefully.
Right. Interesting. Well, it takes a few groups to be that frontier and create the tipping point. So I understand the mission there. Brian, it's been great chatting with you and having you on the pod. So I appreciate your time today coming on, and I'd love to do a follow-up further down the road with this new venture and get an update on the metals company as well, because it's a fascinating story, a very innovative one, and I'm excited about it.
Thank you, Jay.